order to obtain the necessary information and to do the right thing at the right time, tax preparers must be prepared. You must have the right tools for gathering the information. In your workbook, there is a client organizer and a form to use with first-time clients. The organizer can also be used for taxpayers who have complex returns, whether you have worked with these clients before or not. It can ensure you cover all the bases in analyzing their particular situations. The other form is used with first-time clients. You need to know their names, addresses, dates of birth, etc. And if it's a husband and wife, you need to know both names, both Social Security numbers, both dates of birth. You must also know the children's names and their dates of birth and Social Security numbers. Then as we talk and we're building rapport with our clients, we find out if they own or rent their homes. These are the kinds of questions that you must ask because they will lead you to the correct type of tax return. Also, it will help you in pricing the tax return because inevitably the client is going to ask how much it will cost to prepare this return. We'll get into pricing in another session. By the way, many of the professional tax preparation programs have some sort of tax organizer built into them, so you can enter the information directly into your computer as you talk with clients. If this client is a brand new client, I always ask that they bring a copy of last year's return. Why? Because many times there will be indicators on that return as to what kinds of questions I should ask for this year's return. When clients return, you must look for changes in their family situations, their business situations, and anything else that may have occurred throughout the year that will impact their tax return. If they opened a small side business that didn't exist last year, you must include a Schedule C in the tax return this year. Maybe they inherited and sold some stocks during the year. You will know they didn't have any stocks last year because there were no capital gains on the prior year's tax return. But you won't know if there are any changes to their tax situation unless you ask specific questions. You should review last year's return prior to sitting down with the returning client. What I do with many of my clients is make little notes on the file so that next year when I open it, I can better anticipate possible changes. For example, when you did Mary's tax return last year, you noted that she was pregnant. So this year, you would say, oh, how's the baby and do you have a Social Security number yet? If you don't do that, there's always a chance that Mary may forget to mention the addition to her family. The workbook has a great list of questions to cover with clients who are returning this year. I won't review them here. I will just remind you that the purpose of these questions is to find out what has changed this year from last and what new activities have happened that might impact taxes. Those changes can make critical differences in the type of tax return you will prepare and the actual tax savings you can create. If you're on the go a lot, I suggest that you carry a copy of Form 1040 and Schedule A in your pocket or purse. You just never know when someone, maybe even at the supermarket, may ask you a question, especially if they know you are a tax preparer. If you happen to have a blank 1040 form and Schedule A in your purse or pocket, you can answer a lot of those questions right there on the spot. You don't need to remember what goes where and on which line. You can use the actual form as a reference and answer a lot of questions. Then you can invite them in to visit with you in your office. These key forms will also help remind you to ask your clients to bring in all W-2s, 1099s, and 1098 forms from the mortgage company if they own a home. And they need to have receipts for rental properties and all other business-related expenses. In other words, they need to have documentation for all deductions that go on an itemized return. Other examples would be real estate taxes and contributions. It is amazing the number of people who forget to bring a list of contributions. What kinds of contributions do they have? They may have cash contributions or checks to a church and other charities like the United Way, the Salvation Army, or Goodwill. Those contributions can all be deducted on Schedule A. You have to remind them to bring their receipts. Also, you might want to remind them about the child care expenses. How much did they actually pay over the Children's World or wherever it was? Did they pay any alimony? Do they have job-related expenses? If they exceed 2% of their adjusted gross income, it may be deductible. That, again, emphasizes the importance of asking good questions. What about stock? During a conversation, you can ask whether they sold this stock they inherited. What else do you need? You need to know when they inherited the stock and the stock's value on the date it was inherited and on the day it was sold. How about records relating to any other business interest? You also need to know about all their business interests and even their checking accounts, routing, and account numbers. These forms will even help you estimate how much the tax return will cost to prepare. Most clients will know what to bring when meeting with you, but a gentle reminder might be necessary. Why meet twice when you can get all the critical information in one visit? That gentle reminder might save you time in the long run.